Nike stock is now down over 35% in the last year, and the stock is now trading at its lowest price to earnings valuation multiple in over 5 years. So is this an interesting opportunity? Well, Nike just released their latest quarter's earnings, so we certainly have a lot to dive into. So let's go ahead and jump in. Now, the past year, obviously, like I pointed out, has been quite rough for Nike, down 35%, and if we look at them year to date, already down 18.81%. Now, before we look at the latest quarter's earnings, let's go ahead and look at the stock from a dividend perspective. We'll jump over to the dividend breakdown sheet and plug in Nike. And what we can see is the starting dividend yield for Nike is currently sitting at about 2.51%. Now, that's interesting because if we look at the historical dividend yield for this company, what you'll notice is this is the highest starting dividend yield they've had in the last 5 years and also the highest starting yield they've had in the past decade. So it's pretty rare for Nike to have that high of a yield. And on top of this, they've grown that dividend at a very healthy rate over the past 5 and 10 years, with the average dividend growth being around 10%. So really a pretty beautiful history of growing those dividends. Along with that, the free cash flow payout ratio is quite low at only 32%. So the dividend looks quite healthy, and the yield looks good, and the dividend growth looks good. There's a lot to like on this sheet. But let's go ahead and look at the recent earnings report. Now, we have to remember Nike has 4 main revenue segments. We have the footwear, we have apparel, we have equipment, and then we have Converse. And unfortunately, Nike is certainly in the midst of a turnaround play. Revenue is down in every single one of these segments. We have footwear. Revenue is down 13% year over year. Apparel, down 10% year over year. Equipment, down 2% year over year, and Converse down 26% year over year. On top of that, the margins are decreasing, which we'll talk about here in just a moment. So the net profit is only about $0.2 billion when we look at it in Q4. That's just a 2% margin, and again, that margin declined as well. So let's go ahead and take a closer look at the recent earnings report. We can see Q4 GAAP earnings per share of 14 cents was actually a beat by 2 cents, even though earnings was down significantly. And then we can see revenue came in at $11.1 billion, down 12% year over year, but this was also a beat. So expectations were obviously very low for Nike already. Revenue and earnings down significantly, but they still beat on top and bottom lines. Now, just how much lower is this revenue compared to their historical normal? Well, let's actually take a closer look at that. If we go ahead and jump over to the stock screener, let's look at quarterly data. We've already got Nike plugged in, but let's change the metric we're looking at to revenue. And we can see, thanks to ticker data, all this information will automatically load in. Now, it's clear revenue has definitely been on the decline for Nike over the last couple of years. And like we saw in this recent earnings report, it came in at $11.1 billion in the most recent quarter. So how does that compare to these other years? Well, if we look at Q3 of 2025, it was about $11.2 billion. But we don't want to compare Q4 to Q3 revenue. We want to compare Q4 2025 to Q4 of 2024. And what we can see in 2024 Q4, they generated $12.6 billion in revenue. So that's a pretty significant decline in revenue. So Q4 revenue came in at about right here. That's the lowest revenue quarter they've had since Q3 of 2022. Obviously, that's not a good sign for the stock. Now, because the company just reported Q4 for 2025, we can actually get a better picture of what the full year of 2025 looked like for the company, and this is something they released on their investors page. We can see full year revenues came in at about $46.3 billion. So let's go ahead and put that into perspective now. We'll jump over to the profitability sheet and plug in Nike. And what we can see is 2023 revenue right here was about $51.2 billion. 2024, about $51.3 billion, and then 2025, $46.3 billion. That was down 10% on a reported basis compared to the prior year, and down 9% on a currency neutral basis. That's a pretty significant decline in just a 1-year time period. But it actually gets even worse. If we jump back over and look at this profitability sheet, pay close attention to this gross profit ratio over the past decade. For the most part, it was relatively stable. It fluctuated a little bit, a percent here and there, but in 2022, it was sitting close to 46%, took a significant decline right here in 2023, and a slight boost in 2024. 2024 gross profit ratio was 44.56. But what was it in 2025? Look at this. Gross margin for the fourth quarter decreased 440 basis points to 40.3%. That is a significant decline in profitability. So when you combine declining revenue with declining margins, it becomes a pretty disastrous. So when you combine declining revenues with declining margins, it really becomes a disaster for the bottom line. Now, historically speaking, earnings have grown a decent bit over the past decade for Nike, but that's clearly not going to be the case this year. So where did EPS end up in 2025? And this is where things get really, really messy. We can see right here, net income was $0.2 billion, down 86%, and diluted earnings per share was 14 cents, a decrease of 86%. Now, this was just for the quarter. If we look at it for the full year, we can see EPS came in at about $2.16, a decrease of 42%. So $2.16, that's the key number there. When was the last time they were at about $2.16? Well, we can see this is their worst year since 2020 when they did $1.63. But the last time outside of that was 2018. So at $2.16, earnings would be coming in at about right here, a significant decline. So all in all, this has clearly been a terrible year for Nike. But with that being said, the question is this already priced into the stock? Because if they're in the middle of a turnaround play and the turnaround is successful, then hypothetically speaking, this could be a massive opportunity to buy into Nike, a company that has historically had a very strong brand. But the question is that brand still as strong as it used to be? For example, when we see the price to earnings multiple decline steadily over the last few years, it means people are willing to pay less for each dollar of earnings that Nike produces. That could be due to a multitude of reasons, whether it's the earnings growth actually slowing down or the company losing its competitive advantage. Now, historically speaking, Nike has dominated their market segments. This is data from 22, but if we look at worldwide footwear sales, they were way ahead of the competition. Adidas was in second, and they were still more than double their major competitor. But while Nike is in the middle of declining revenues in all of their revenue segments, like we already pointed out, some of their competitors are still growing. Now, to be fair, a lot of the pain that Nike is feeling is actually coming from the Asian markets, and China to be specific, and that's been true for a lot of companies. For example, revenue from China, we can see right here, was down 21% year over year. And Nike noted that China is obviously a large market for them, but the tariff issue could continue to weigh and may not be accretive to the company's operations for the next few quarters. Now, I've obviously hit you with a lot of bad news. What about the good news for Nike stock? Well, the good news is they brought on a new CEO in the last year, and some investors have confidence in the management team of Nike, like Bill Ackman. For example, one of the changes they're making is Nike plans to sell on Amazon again for the first time since 2019. Nike management also said recently that it believes that the worst may be nearly over, and I think investors certainly hope that's the case. So are the worst days behind Nike? Is the turnaround play taking effect? And if so, does that mean now's an opportunity to buy a dividend growth stock trading at a good valuation? Well, let's talk about it for a moment. Whenever we talk about a turnaround play, one of the best ways to actually value the stock is by using a reverse discounted cash flow analysis. Basically, what we're doing is we're seeing how much growth the market is actually pricing into Nike. And right now, we can see assuming 0% growth for Nike, we come to a reverse DCF price per share of $58.34, but the current price is just $62.54. So what does this tell us? There's very little growth priced into Nike. If we bump this up to just 1%, all of a sudden we get very close to the current share price. So essentially over the next decade, the market is pricing in just 1% growth of free cash flow. The question we have to ask is, do we think that number is correct? If we think it's higher, the company's undervalued. If we think it'll be lower, the company is overvalued. Now, what have we learned today? The headwinds for Nike aren't over. Revenues have been declining over the next year. Revenues have been declining over the past year, and the same is true with earnings. So that's not a perfect way to look at it. It's not going to be a linear line. It's going to dip down, and then it's going to go higher. So let's take a closer look at it by using a sensitivity analysis. We'll plug in Nike. All the data will load in again thanks to Ticker Data, and let's take a closer look down here. One of the cool features of Ticker Data is you can automatically import these earnings projections from analysts, and it'll take the average. And the numbers we get are all over the place. 2025 earnings, which we actually just found out came in at $2.16, so the average analyst estimate was very close to that. We have it for 2026, 2027, 28, and 29. And look at this, negative 42% growth. Over 2026, negative 14% growth. But then they expect the turnaround to happen. 252, 359. By 2029, $4.18. Now, if they could get to $4.18 by 2029, we can see that would put earnings somewhere up here. So honestly, it's not significant growth from 2024, but it's significant growth from the lows that they're about to hit. But based off this information, we can find out what our target buy price should be and what type of returns we can actually expect from Nike stock. So let's just assume the average analyst expectation and go with this projected EPS CAGR of 18%. Now remember, this 18% is a CAGR based off the very low earnings they had in 2025. So it's not like they're actually growing earnings faster, earnings are really just rebounding back to where they were. On top of this, we now need to project our PE ratio. Again, the average PE ratio over the last decade, if we remove these huge outliers in 2018 and in 2020, was about 28.52, so investors were willing to pay a premium for this stock. But the trailing 12 months PE ratio was just 20.64. So again, typically two things are happening. Either earnings are slowing down, or two, Nike is losing its moat, meaning it's losing its true brand power. Investors are willing to pay less for each dollar of earnings for Nike. So what will the PE ratio actually look like in the future? Well, if Nike's able to start growing earnings at just an average rate after they turn things around, the PE ratio will almost certainly be a little bit higher than it has been over the trailing 12 months. But with that being said, it might not get back to where it was on average over the last decade. At least I don't think we should make that assumption. Let's be conservative. Let's say the PE ratio is about 22.5. What type of returns would we get? Well, we can still see over the next couple of years, it doesn't look too attractive, but over the long term, by 2029, by 2030, the compounded annual returns start to look better. We get to a target share price of $93.70. By 2030, $110.56. This is the reality of what a turnaround play looks like. The returns can look attractive over the next 4 to 5 year time period or even 6 years, but the next couple of years do show pain ahead. Now, who knows, perhaps things go really well for Nike over the next couple of years, and even if earnings are about where we've already projected, maybe the PE ratio climbs all the way back up to 25. And if that's the case, the returns can actually look above market averages. But I do think that could perhaps be a bit optimistic. So is Nike undervalued at its current prices? Well, it kind of depends on how you look at it. Over the next year, there's probably still a good bit of pain ahead. The turnaround is happening, but you're not going to see it in the underlying fundamentals in 2026. At least that doesn't appear to be the case. Really, it looks like we're going to start to see things look quite a bit better by the time we get to around 2028, 2029. If you have a 4 or 5 year time horizon, then maybe this is still an interesting stock to consider having in your portfolio. But with that being said, you also have to take into account opportunity cost. Are there better opportunities out there? So go ahead and let me know what you think of Nike stock in the comments down below if you plan on buying or selling. And like always, if you'd like to download any of my spreadsheets and also get access to the Ticker Data add-on in Google Sheets that allows you to automatically import stock financials straight to your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching,